The 4 stocks I put a total of $1,500 into this week. What is happening, investors? It is your boy Jack. I am not a financial advisor, and I invested $1,500 this week. For me, that is a pretty substantial amount because my total portfolio is only worth about $11,500 at the moment. So that was more than 10% of my entire portfolio invested this week, and it only went into 4 companies. So today we're going to be speaking a little bit on each of these 4 companies and why I put my money into them specifically, as opposed to literally any other companies in the world. And I'm going to tell you who the 4 companies are right now. The first one is Tesla, and this was the largest one-off investment I've ever made. Second up, I bought some more Workhorse stock. I actually made a full video on them earlier on, so if you want to check it out after you watch this video, feel free to do so. The third company I went ahead and picked up was some more Amazon, and the final company I went ahead and picked up was a little bit of Microsoft. But it has been a crazy week all in all in the stock market, I'm sure you're all aware. So right before we get into our first company of today that we're going to be speaking about, Tesla, can I please ask you to smash a like on this video? This is the second upload of the day. I am working hard to bring you guys as much content as possible, and I would really appreciate that like. Please do subscribe if you're new around here. We just broke 13,000 subscribers. It's absolutely mind-blowing stuff. And drop me a comment down below. Let me know what you think of any of the companies I picked up this week, or whatever you picked up this week. I'm always interested in hearing from you guys. So with that being said, guys, let's get into the video. So we are having a look at Tesla stock, baby, a company I am a brand new investor in. And I was one of the very few unlucky people to buy right about here at the $1,700 range before it proceeded to drop down over 12%. So I mean, most people invest in Tesla and you know, they make like 20% in a week or so, but I've actually lost 12. But I'm still smiling. I'm absolutely fine about this, okay? I went into Tesla understanding just how volatile of a stock that it is. And I understand, you know, worst case scenario, Tesla could slip towards a $700 mark. But that is an absolute worst case scenario. I thought about investing at Tesla at $300, at $600, at $900, at $1,000, and I never pulled the trigger. And I've missed out on a lot of gains because of that. And I just got very, very tired of missing out on the gains. It's a company I completely and utterly believe in the long term. I'm getting involved. So why did I specifically decide to pull the trigger? Okay, well, the main reason was I just actually started doing due diligence, and I started looking into them and researching the company a lot more than I had in the past. The reason I went ahead and pulled the trigger as well is because Q2 earnings come out next week, July 22nd. Literally 5 days from the making of this video. And there is going to be a lot of exciting things spoken about in the earnings call, but the most important thing is if they post a quarterly profit, which they are essentially guaranteed to do if we go off of what last quarter's earnings were, and how they've improved in sales this quarter, they will be eligible for inclusion in the S&P 500, which means that a lot of big hedge fund managers, ETF managers, all of those people are going to have to start investing in Tesla, which will obviously mean more money put into the company, which you would expect to lead to, at least to some degree, a higher stock price. Now, I know in the past, when a company has initially gotten into the S&P 500, it's caused a massive surge in the stock price in the short term, and then it kind of trickles back down till it gets to a relatively normal level. But the new normal level is still higher than it was before. You're probably aware of this at this stage, but when Yahoo's stock was included in the S&P 500 all the way back in 1999, they jumped 64% in 5 sessions between the announcement and its actual entry. Now, this isn't a guarantee, this doesn't always happen, but it is just an idea of what can happen in the short term, and that's why I wanted to get in now before these Q2 earnings come out and potential S&P 500 inclusion comes along. As well, we have Tesla Battery Day coming up as of right now, September 22nd of this year, and Battery Day historically has, you know, led to some big moves in the stock price, whether it goes up or down. But Tesla is already so ahead of the competition that any good news that comes from this should only push the shares price up higher. I think if you want to invest in Tesla, you have to understand just how much intraday moves it can have. I mean, we saw it here when during the day it went up 14%, but it actually closed negative 3%. That's the kind of movement Tesla can have on any given day. Just remember that if you're a long-term investor, what happens over the span of a week or a month or anything of the sorts doesn't really matter. And that's exactly what I am in regards to Tesla. I am a long-term investor. So I did finally go ahead and open up a position. You're all probably aware of this. I made a video on it earlier on in the week. But I think they just have an absolutely fantastic long-term outlook. I do plan on picking up more of this potentially early next week, potentially today, but I already have invested a lot this week, so we will see. But anyway, that was the first company. That was Tesla. And look, coming straight off the back of Tesla, let's speak about Workhorse, because that's the other electric vehicle stock that I want to speak about today. Now, I'll keep this very short because literally the video I uploaded earlier on today was on Workhorse. The big thing thing about Workhorse right now is whether or not they can get this USPS contract for $6.3 billion, or at least a considerable amount of it, because something like that will mean an awful lot to a company like Workhorse. And so there was 4 companies left in the running for this contract, okay? And the closing date for bids ended July 14th, literally just the Tuesday gone. Now, nobody knows when it's going to be announced, you know, who has actually gotten the contract, but in my eyes, it seems extremely likely that it's going to be Workhorse, or at least that Workhorse is going to get a substantial portion of the contract, because they may give it to 1 or 2 companies. The new head of USPS is a big Trump donor. California is creating America's largest market for electric trucks. The new rule created by CARB, which is the California Air Resources Board, specifies all manufacturers must sell electric and hydrogen powered vehicles by 2024. By 2035, zero emission trucks should account for 55% of medium duty sales and 75% of heavy duty vehicles. Trump doesn't like USPS right now. He has called them a joke. He has threatened to not help them if bankruptcy becomes imminent in these tough times. He also needs votes in Ohio, where Lordstown Motors, which Workhorse owns 10% of, is based. Basically, all the signs point to Trump wanting Workhorse to get a piece of this contract. And now the head of USPS is a big Trump donor, so he will be somewhat influenced by Trump. And it all just adds up when you start combining the pieces together. But the funny thing is that even without this contract, I still think that even at these inflated prices of up over 400% at the peak of this month, they are good value as a long-term investment. There's always going to be another contract. There isn't another OED company in America who is American based who offers these zero emission electric vehicles. They also have patents on these horsefly UAV delivery drones, which are out there and running right now. They just have an awful lot going for them. Now this one is a little bit more speculative in nature. That's why I did only go ahead and pick up 10 more shares, but to be honest, I am thinking of picking up another 10 shares today. My mind isn't 100% made up yet because I don't want to put too much money into these high risk companies, but I mean, the reward just looks insane in the short, medium and long term. There just isn't really any pure American competition in this van, especially when you look at what California is trying to do by introducing zero emission vehicles. And there is a market for this business. There's an $18 billion annual addressable market size for last mile delivery vehicles in the US, and that's exactly what these guys do. The C650 and the C1000 are last mile delivery vehicles. If you're not aware of what they are at this stage, essentially, you know, when you order a package from Amazon, it rolls up outside your house in a van type thing. It's not a big semi truck. It's not a class 8 vehicle. That wouldn't make any sense. And there's more than 350,000 last mile delivery vehicles purchased by US fleets annually. To me, Workhorse just looks like an amazing bet on EV technology going forwards. And as well, to an extent, it's a bet on e-commerce becoming more and more popular, because as e-commerce becomes more and more popular, there will only be more demand for last mile delivery vehicles. And if you know me, you know I'm a massive bull on e-commerce in general. And one of the things I really love about them, as I always do with electric vehicles, is the amount of money they can save companies over a long period of time, okay? So on a 20-year time frame, using one of Workhorse's vehicles could save a company $170,000 as opposed to using a gas alternative vehicle. At this stage, I have 3 full videos on Workhorse. If you want to check them out, just look them up on my channel. But yeah, I went ahead and I picked up a little bit more, nothing crazy because it is still high risk. Okay, so taking a step away from electric vehicles, we're having a look at Amazon, who is currently sitting just at about $3,000 a share. And it was only very recently, Monday the 6th of July, that this company broke the $3,000 mark for the first time. And they proceeded to smash up. I mean, they went up 10% in value from a Thursday to the following Friday, all the way up to $3,200. And since then, they've come back down to this $3,000 mark. And if we look a little bit more intraday, they almost came down as low as $2,900. So Amazon is a company that I absolutely love, and I see always holding an absolutely massive position in my portfolio. So last week, I saw them go all the way up to $3,200, and I saw them start to come all the way back down towards $3,000. And last week as well, the Nasdaq was quite predictable. You know, it was up, it was down, it was back up. And so I bought Amazon on the dip. I actually got in at exactly $2,946 a share for an extra 0.1 of a share. So nearly $300 into Amazon. And that brings my total investment up to 0.35 of a share. I am making my way towards that 1 share. I'm going to get there. I just mentioned in regards to Workhorse that I am a massive bull on e-commerce. And these are literally the biggest player when it comes to e-commerce. And next week, the 23rd of the 7th, so the day after Tesla's Q2 earnings, Amazon's Q2 earnings will come out. And I mean, if we look at what analysts are saying in regards to Amazon, it is pretty much all buys and strong buys, except for a very few amount of holds. Now, Amazon, in my opinion, honestly, might not have the best Q2 earnings. So if you're up to date with Amazon, you've probably seen this. It is from a while back, April 30th. If you're a share owner in Amazon, you may want to take a seat. Amazon reports earnings, plans to spend all of Q2 profits on Roni Boy response. So I could see Q2 going either way, to be honest, because we did see more demand in Q1, more people are ordering more and more products online, but they've already come out and said that their Q2 profits are pretty much going to be spent on, reacting to the Roni. Now, regardless of what happens, I'm going to be okay with it. If, lower than expected earnings come out and people panic sell off on Amazon, that's honestly, to me, best case scenario. In the short term, I could be down a little bit, or else I could, have less profit in the company, but I will be able to pick up more shares and ultimately get closer to my first full share in the company. And, if things go well, if earnings are better than expected, the value just goes up and it's happy days. Now, there's analysts both for and against Amazon's Q2 earnings season, so there are two sides to this story most definitely. And if you're an investor, I'd recommend going out and seeing the good and the bad. But a 5-star analyst has come out and said that Amazon will beat 2Q earning estimates. So we expect strong 2Q20 results with revenue and operating income above high end of guide range. Key revenue drivers include AWS, advertising, subscription and accelerating e-commerce growth, plus 29% year over year versus plus 17% year over year in 2019. And if any company is Roni proof, it has to be the e-commerce giant. The surge in demand during the pandemic's initial wave has been well documented, and with the virus still amongst us, it is safe to say demand for Amazon services won't decelerate anytime soon, and I think that is quite obvious. I've said it in videos before, but this is pretty much the main place I buy everything online. They just have everything. Now this here, Amazon's expenses have also increased significantly during the period. These will act as a costly counterpoint to an increased sales, as spending on infrastructure, worker safety, extra pay, and an expanded workforce are sure to impact the bottom line. And that's kind of what I was saying before, that they actually mentioned after their Q1 call, is that they're going to spend all the profits, and maybe a little bit more, Jeff Bezos said, on the Roni Boy response. But basically, I saw a company I love fall under a very significant number, which is $3,000, and I figured, you know what, this is going to be a pretty good time in the long term to pick this company up. So I mean, the growth has been immense. On the monthly chart, we're up 13.59%. They were up over 21%. I was up over 20% in my position on Amazon. It's less now because it's come back down, and I have also increased my cost basis. But I've been buying Amazon since they were below $2,400 a share. On the 6-month chart, up over 60%, which is obviously just absolutely fantastic. They have an incredible balance sheet. They have an incredible future ahead of them. Everything about them is just beautiful. So that's why I went ahead and I added to my position. Okay, and the last company I picked up this week was Microsoft. So with Microsoft, I just went ahead and I picked up one more share, which was about $203. So right about where we're sitting right now. So I mean, on the monthly chart, it hasn't been crazy. They're up just less than 5%, which is a relatively slow month for the Nasdaq or even something like the QQQ. So it's not like they're particularly underperforming, it's just been a relatively slow month in general. If we fall back to the 6-month chart again, it's a company who's up 22%. If we go from the very bottoms, it's been a very nice recovery, up pretty much 50%. So Microsoft Azure is well positioned to benefit from share gains in cloud computing. We believe street estimates for Azure growth are still too low, providing opportunities for faster growth to drive faster EPS growth, as well as potentially help margin expansion, which would also help EPS growth. And Microsoft should benefit from continued electronification of corporate workflows with its end-to-end computing systems. And there is more to them than just their Azure cloud. And again, Microsoft has their Q4 earnings coming out July 22nd, the same day as Tesla. Next week is more than likely going to be a very volatile week. Oh, I'm going to have to put more money into my investing account. And here's just an example of what earnings can do for a company. I mean, Netflix, they've been on a crazy run. I mean, on the month, up 17.8%, far exceeding pretty much the large majority of stocks, even tech stocks, the likes of the Nasdaq. They actually had good earnings come out, but it was worse than expected, so they're dropping 7.5%. Now, I don't expect this to be a particularly meaningful dip. I do expect it to recover quite quickly, but still, it just shows the power of these earnings. And that's why next week we're going to have to keep our eyes very peeled. Now, as of right now, Microsoft is expected to deliver a year-over-year increase in earnings on higher revenues when it reports results for the first quarter ended June 2020. So we just have to hope, that earnings are better than expected, which are already expected to be higher. Usually if earnings are expected to increase and you beat expectations, that is a very good thing. So the software maker is expected to post quarterly earnings of $140 per share in the upcoming report, which represents a year-over-year change of plus 2.2%, and revenues are expected to be $36.59 billion, up 8.5% from the year ago quarter. Now, I mean, to be honest, again, the reason I'm buying them is just because on the monthly chart, they took that little bit of a dip. I was just happy to pick up an extra share or so. It's a company like Amazon. I think I'm just going to be happy to, buy and hold forever. And whenever I get some sort of opportunity to buy more, I'll go ahead and do it. But those were the 4 companies I went ahead and picked up this week, people. If you have watched till the end of this video, I really appreciate you so much, and as I always like to say, you are a true legend. But I am just trying to add as much to my portfolio right now as possible. I mean, I want to buy more stocks today, and this has been my single biggest week of investing ever. Anyway guys, I do hope that you enjoyed today's video. If you did, please smash it like, it genuinely means the world to me. Drop me a comment down below, let me know what you thought or what companies you picked up. I will see you for the next video. Have a great day. Peace.